44 right now as we, consumers and business owners, continue to struggle under the weight of inflation and higher borrowing costs. Second quarter GDP numbers show the U.S. economy is teetering on a recession. And local financial professional Brian Levy from BML Wealth Management joins us now to share more with us about the current economic climate. Brian, good morning. Thanks for joining us.
Good morning.
All right. So, Brian, what signs of a recession are we seeing right now? Because I can recall in recent reports released by the federal government, there's kind of some mixed messages out there right now, right?
You're totally right, Adrian. It really depends on your definition of a recession. The National Bureau of Economic Research is the nonprofit bipartisan group that calls a recession, and they look at a number of factors. It's not a fixed formula, which is why everybody has a different opinion, and they're always past tense, so they don't call a recession until a year after the fact. But the contributing factors, Adrian, are going to be, like you said, the 2 quarters of negative GDP. We have the inflation numbers, and the new inflation numbers for July come out tomorrow. And then we have mortgage rates and then the supply chain issues that I don't think are clearing up anytime soon.
And then we've been talking about how the Fed keeps raising the rates here, interest rates. How does the latest rate hike play into these fears of a recession?
So, ultimately, when they're increasing the rates, and they've done it now 0.75% twice, but ultimately that's going to increase the borrowing costs, which are going to kill the growth in the economy, or could kill, I should say, the growth in the economy. And the Fed has 3 more meetings this year to determine what they're going to do. This is the most aggressive they've been since the 90s. And their goal, just like when you're on an airplane coming down for a landing, their goal is a soft landing, not a hard one. We're going to make it regardless, but they're trying to balance that and have a soft landing.
So what do you think? How likely is it that we're going to see a recession?
Well, I would say most of us believe we're in a recession, right? The economists believe next year is going to be the quote unquote recession year. I would say the positive factors, because I always like to look at the good side of things and think we're going to come out of it on the other end, is the unemployment numbers are good. We have full employment in this country. Hourly wages are up, and consumer spending is still there. But ultimately, the Fed will dictate how deep that recession is going to be and how long the recession is going to last.
And are there ways that we can essentially recession-proof our money?
I definitely think so. Because remember, recessions typically happen, Adrian, every 5 to 6 years. A lot of people forget that. And actually, the Bureau who calls recessions, NBER, called it in the beginning of the pandemic. And a lot of people don't even realize that. So I think there are a few ways. Number one, diversify your portfolio. We look as retirement planners at a bucketing approach. So you have your short-term money, your middle-term money, and your long-term money. And then once you have that in place where you know, hey, this money I'm not going to use for a long time, then you need to have your emergency fund set aside, which we always talk about 3 to 6 months of living expenses you should have set aside. And don't make emotional decisions with your money. Missing out on the best days in the market or trying to time the market is not as important as time in the market. And one big thing that all of us should be doing right now is eliminating our debt, because that right now with interest rates going up can be a big burden on your monthly cash flow, because ultimately the biggest tool we have is the income and our earning power that's coming in.
Right. So we've been talking about the record high inflation, the rising interest rates. You just shared some tips with us. Is there anything else that you can share with us that you're telling your clients?
Yeah, I would say right now you should be looking at opportunities. Again, take the fear out of it. Right now, stocks are low. There's opportunities to do tax planning. There's opportunities to look at, hey, how do I plan for my future and minimize risk? And ultimately, if you're close to that retirement age, Adrian, if you're 5 years out, you should be taking a sort of a relook at or take pulse of how much risk am I comfortable taking? And if you're not in line, just get that in line. But ultimately, it comes back to having a plan.
All right, Brian Levy from BML Wealth Management. Great to see you again. Thank you for joining us and for sharing your insight. I can get more information at bmlwealth.net. Thanks, Brian.
Thank you, Adrian.